It's not looking too good, folks. We're only 2 weeks into October, and it's already been the worst month for crypto so far. Through 11 different hacks, cryptocurrency has been the target of about $718 million in theft. Yeah, just this month. It's no surprise that this year is turning out to be the year with the most hacking incidents. Is anyone going to control this, or let's find out more. Starting with more details on the recent hacking incident. Hackers are about $3 billion richer this year thanks to cryptocurrency. Even if it's currently a bear market, there's a lot of activity among hackers who are attacking different protocols. Protocols, or decentralized applications that haven't undergone a comprehensive audit, may turn out to be a quick and trustworthy source of reward for these hackers. Hackers take advantage of how easy it is to access encrypted files on protocols that aren't well protected. In 2021, attackers made more than $3.2 billion, but 2022 got off to an even worse start with a $325 million Wormhole vulnerability, a $625 million attack on Axie Infinity's Ronin bridge, a $200 million Nomad bridge exploit, and finally, a $200 million Wormhole exploit. Attack methods in the cryptocurrency industry range from market manipulation, in which bad traders use millions of dollars to move thinly traded markets in their favor so they can make many times what they put in, to the use of bridges, a blockchain-based tool that lets users move money between different networks. This month alone, over 3 bridges were broken. During this weekend's attack on a bridge owned by the BNB chain, $566 million worth of illegal profits were made, including over $100 million. Then on Monday, around $1 million worth of QuanX tokens were stolen through a bridge breach that targeted the Layer 1 blockchain Quan platform. Then on Tuesday night, the popular Solana Mango Markets trading protocol lost $100 million in liquidity because a bad trader manipulated spot token prices to borrow all the protocol's assets to cover their position. Up next, the hackers left some traces. We're observing a shift in the way hackers are operating and what they're targeting. Most hacks happened on centralized cryptocurrency exchanges in 2019, but when those businesses tightened their security, nearly 90% of hacks happened on DeFi protocols in 2022. But guess what? It might be difficult for the person responsible for the $112 million theft from Mango Markets to cash this money out. The attacker increased the spot price of the Mango governance token on centralized exchanges, then borrowed stablecoins using the inflated coins as collateral. When the prices of MNGO returned to normal, the protocol was left with bad debt. The hacker then suggested that some of the money could be paid back by using the platform system for making decisions. On the blockchain, it's possible to follow the hacked stablecoin transfers from Solana to the corresponding Ethereum USD coin transfers. When the assets were moved to DAI through a decentralized exchange, there was no longer a chance that the USDC issuer Circle would freeze them. The ENS domain ponzishorter.eth is among the $30 million worth of assets that are currently held by the Ethereum wallet that was used to store the stolen money. The wallet includes a lengthy history of NFT and DeFi-related transactions, which is rare for a theft of this magnitude because thieves typically avoid tying linkages to any information that could be used to identify them. All this could help investigators from the exchange or law enforcement who are trying to connect the address to a real person. Next, the crypto world is hanging by a thread. This isn't the kind of spooky season we were looking forward to. Public-private key pairs are frequently used by blockchain organizations for encryption. Users have a public key and a private key that they use to carry out specific operations. So while everyone is aware of the public key, only the owner is aware of the private key. As soon as an attacker gets those private keys, there is nothing stopping them from stealing those funds. To keep their private keys secure, some blockchain users maintain them on a physical device. Others make use of Bitcoin exchanges like Coinbase, which secure the user's private keys. But account hacking has increased, particularly on Coinbase, the biggest exchange in the sector. Once they have access, hackers can quickly empty a user's Bitcoin account in a matter of minutes. Another typical method used by hackers is to phish individuals to get their private keys. But then some cryptocurrencies, like Bitcoin, which was also the first in the field, are proving to be unhackable. Since the beginning of 2022, the value of many well-known cryptocurrencies has fallen by over 70%, making it a terrible year for cryptocurrencies. And with the most recent cryptocurrency crisis in a string of breaches, thefts, and fraud, things aren't getting any better. Now, what does this mean for crypto? All these hacking attempts appear to be an instance of unorganized criminality, which is less systematic, but no less harmful. A cross-chain bridge allowed a hacker to take advantage of a weakness in the BNB network. No other coins were harmed. That's why cross-chain bridges are disputed by many crypto professionals. They've got security concerns. Transactions in the decentralized finance sector are governed by code, and this method seems to have several flaws. There's a possibility that this attack will encourage others to check for similar vulnerabilities in the future if these security flaws aren't quickly fixed. The second highest month for hacks was March because of the greatest single hack to date, the Ronin network breach, which cost around $625 million. Over 200 hacks and over $3 billion in losses were recorded in the previous year. As we quickly approach the $3 billion mark, 125 hacks have already occurred this year. The terrible news is that this attack will simply increase investor apprehension surrounding the cryptocurrency market. Many people will be hesitant to switch to digital money because of all this, and you can't blame them. Now, for the 5 worst cryptocurrency hacks, starting with Gox Hack of $473 million at number 5. It all went downhill when the cryptocurrency exchange Mt. Gox lost 25,000 bitcoins worth roughly $400,000 in 2011. People call it the first significant crypto attack. At that time, around 70% of all Bitcoin transactions were being handled by the cryptocurrency exchange. It happened twice though, and in 2014, Mt. Gox was attacked once more. Nearly 650,000 of its customers' bitcoins and about 100,000 of its own were lost. That was valued at around $473 million at the time, or about 7% of all bitcoins. At first, it wasn't clear why the coins had gone missing, but more evidence showed that they had been taken from the business's hot wallet. Next at number 4 is Coincheck Hack for $534 million. The Japanese exchange Coincheck was attacked in January 2018 and lost $523 million worth of NEM coins, which are now worth roughly $534 million. A hot wallet, which is a live cryptocurrency wallet and is less secure than an offline cold storage wallet, was the source of the issue. NEM Foundation President Lon Wong called the Coincheck hack the worst heist in the world's history at the time, since it was even bigger than the infamous Mt. Gox attack. Despite being acquired a few months later by the Japanese financial services firm Monex Group, Coincheck was able to withstand the breach and to carry on with business. Now for number 3, Binance for $570 million. The Binance exchange was compromised for $570 million in one of the most well-known hacks in cryptocurrency history in October 2022. Hackers used the BSC Token Hub cross-chain bridge to their advantage, causing the creation of excess Binance coins and then the removal of 2 million BNB tokens. The native token of the cryptocurrency exchange is BNB. The hack was made possible via a flaw in a smart contract, demonstrating the need for stronger blockchain security. Up next is Poly Network's $611 million hack at number 2. The Poly Network decentralized finance network was vulnerable in August 2021, and a lone hacker used it to steal almost $600 million. The developers of the project tweeted a request for the $33 million tether that was among the stolen cash. The unidentified hacker started collaborating when the Poly Network established multiple addresses for the money to be refunded. After only 2 days, about $300 million was found, and it was found that the hacker had gone after the network for fun or as a challenge. Finally, Ronin Network's hack of $625 million is at number 1. Axie Infinity, a well-known blockchain gaming platform, was the victim of the biggest cryptocurrency hack to date, which was carried out in March 2022. The USDC stablecoin and over $625 million worth of Ethereum were stolen when hackers broke into the Ronin network. According to U.S. officials, the heist was connected to the Lazarus Group, a hacking group supported by the North Korean government. A month later, Binance was able to get back $5.8 million of the lost money, but it was still the biggest hack in history. That's a wrap for this video. With just a little over 2 months to go in 2022, do you think more crypto hacks will follow? Let us know in the comments below. As always, don't forget to like this video and subscribe to our channel for more videos like this. See you in the next one.